Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. With the surprise rate hike by the RBA now in the rearview mirror, market tension is starting to show across the board ahead of the US Federal Reserve interest rate decision on June the 14th. The outcome is widely expected that the US central bank will keep rates on hold. However, we've still got the US inflationary numbers on the 13th, a day before the rate announcement. New data overnight showed that initial jobless claims reached their highest level since October 2021, indicating a potential softening in the labour market after the Department of Labour said that the US weekly initial unemployment claims rose by 28,000 to 261,000, showing a weaker labour market, missing the forecast to 235,000. However, layoffs are probably not accelerating as the data covered the Memorial Day holiday. Looking at the current technical pattern, as the market is pushing higher, there is a bit of divergence here from the RSI. I feel that we are getting a little bit close to a potential reversal, and therefore from 67.40 may see a re-challenge back at this 60-day moving average somewhere around 66.65 and reassess from there, as a break would give further indication back to 65 cents. Although the squeeze may see that high, I feel the market will struggle beyond 67.40. The euro managed this time to reject the 107 level and surges towards the region of 107.80 this morning. From there, the resistance at present is capping at 108.35. In light of the dollar index, which measures the greenback strength against a basket of six major currencies, tumbled from 104 down to the lows of 103, still could see a rebound. And I feel that this number that came out overnight, the US weekly initial unemployment claims, was a one-off, and therefore could see a rebound in the dollar index and seeing all these current rebounds reverse. So if that's the case, then I feel that 108.35 caps and we're looking back to 107.35, then 106.65.70. The dollar yen back towards the bottom side of its range, just above that 139 handle. In light of the picture, I feel, well, the pattern is the market is still relatively weak, but still demand is lurking, and no doubt the bulls will probably see this as an opportunity and snap up the market's lows and take it back towards that 140 level, with 141 to 142 still the objective. Like the pound has also snapped to the upside, but above 125 has shown initial struggle, at least going back to the beginning of April, and therefore could see another downturn away from the region at present at 125.80.95 and look back towards the bottom side somewhere around 125.10 to 124.5. Although gold did rebound in front of that key level of 1,928.33, still range bound after 5 challenging days, has still not been able to clear this level around 1,960.65. Technicals are still weak, so therefore I do feel that if we do get a bounce in the dollar, then the market will take its turn in seeing a slip back towards the bottom side of its range. Still locking in around 1,928 to 1,965. Oil, well, the market snapped to the downside and whipsaw price action rebounded off that key level of 69.5, and I still feel $74 is in play. With a mixed technical outlook though, any pullback should be shallow, or at least respect that region around 69.5 and see it rebound towards $74 and reassess from there. Well, that's a wrap for the week. Thank you very much for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new weekend.